From Oreo to Milka, Cadbury, and Toblerone, Mondelez has built a global empire of sweetness that reaches every corner of the world. But in 2025, can this snack giant keep growing, or will rising costs and changing tastes bite into its profits? Let's find out together. Today, we're taking a bite out of the snack world with Mondelez International, ticker MDLZ, listed on the Nasdaq. It's the company behind some of your favorite guilty pleasures: Oreo, Milka, Toblerone, Cadbury. You name it. But beyond the sweetness, is Mondelez still a good investment in 2025? Or is it starting to melt under pressure? Let's find out. Mondelez designs, produces, and sells snacks all over the world: chocolate, biscuits, gum, and candy. The company operates in more than 150 countries and owns iconic brands like Oreo, Lou, Cadbury, Milka, and Trident. In short, Mondelez is a global snacking empire built on small pleasures that people never seem to give up. What makes it special is its balanced portfolio, affordable products with premium appeal, a sweet spot between volume and value. Mondelez splits its business into 4 categories: chocolate, biscuits, gum and candy, and beverages. Chocolate leads the pack with Cadbury and Milka. Biscuits, driven by Oreo and Lou, bring stability and global reach. Gum and candy diversify the mix, while beverages remain regional. The beauty of this setup: diversification. When one category slows down, another keeps the company growing. Geographically, Mondelez earns across North America, Europe, and emerging markets, a truly global business that buffers currency swings but adds a bit of complexity. Over the last 5 years, Mondelez's stock has shown steady, moderate growth, not explosive like tech, but reliable. That's exactly what you expect from a consumer staples company: lower volatility, predictable returns, and a strong dividend history. It's the kind of stock long-term investors hold for peace of mind, not for adrenaline. Revenue has been growing gradually, reaching new highs near $36 billion. It's not hypergrowth, but it's consistent. The result of strategic acquisitions and smart pricing increases. Even with inflation biting into costs, Mondelez continues to grow both in volume and value. Net income tells the same story: steady progress with solid profitability. Snack demand doesn't collapse in recessions. It's one of the most resilient consumer behaviors. That stability makes Mondelez a comfort stock in every sense of the word. Free cash flow stays strong, hovering around $4 to $5 billion a year. This gives the company room to raise dividends, repurchase shares, and keep investing in marketing or acquisitions without heavy borrowing. For investors, that's a deliciously safe setup. Operating margins hover around 15 to 17%, healthy for the food industry. That tells us Mondelez manages costs well, despite volatile cocoa and sugar prices. When a company can protect margins in a high inflation environment, that's management discipline, worth noting. EPS has been climbing steadily over the decade, thanks to share buybacks and consistent profitability. This kind of compounding is what makes Mondelez a long-term investor's favorite: slow, predictable, and cumulative. The stock trades around 20 to 22 times earnings, a fair valuation for a global leader with stable growth. It's not cheap, but it's not overpriced either. You're paying for safety, brand strength, and dependable dividends. Mondelez keeps rewarding shareholders with a steadily rising dividend. The yield isn't high, but the payout ratio is conservative, leaving room for further growth. In a world of uncertain returns, that kind of reliability feels refreshing. The company carries manageable debt levels, about $20 billion, supported by consistent cash flow. The balance sheet isn't spotless, but far from risky. Mondelez uses debt strategically, mostly for acquisitions. Analysts are generally positive on Mondelez, with most calling it a buy or strong buy. The consensus target shows modest upside. Again, this is not a high-growth rocket, but a steady ship in uncertain waters. Mondelez's biggest strengths are its legendary brands, geographic diversification, and stable cash generation. Whether the economy booms or struggles, people still reach for an Oreo. Its scale and distribution give it incredible pricing power, which few competitors can match. Still, there are a few cracks in the chocolate bar. Mondelez faces commodity price swings. Cocoa and sugar are unpredictable. It's also exposed to currency risks in emerging markets, and its product innovation sometimes feels too cautious. Plus, growing health awareness could pressure traditional snack sales if the company doesn't adapt fast enough. I'm a shareholder of Mondelez International and continue to reinforce regularly. It's not flashy, it won't make headlines, but it does what it promises. Steady growth and reliable dividends. For long-term investors, Mondelez is the kind of stock that quietly compounds wealth while you sleep. It's a sweet piece in any balanced portfolio. This is not financial advice. Always do your own research before investing. Thanks for watching, and don't forget to like, share, and subscribe for more stock analyses every week. Comment below which company you'd like me to cover next. See you soon. This was InvestiChan.